Welcome back to the Today Show right across the country. Look, the breaking news overnight is the US Federal Reserve has raised interest rates by 1/4% to a band between 3/4 and 1%. It's the third time the Fed's raised rates since December 2015, and it's a sure sign it feels the US economic recovery is robust. Now, here's the Fed chair, Janet Yellen, a short time ago at her press conference saying she thinks rate rises will be gradual, but she makes it quite clear there's more on the way.
I think the trajectory that you see is the median in our projections, which this year looks to a total of 3 increases. That certainly qualifies as gradual.
The big issue is that rate rises in the biggest economy in the world will reverberate around the rest of the world. Here, the NAB, which previously said it expected a rate cut this year, now says there will be no change. Others say there could be a rate rise maybe late this year. So the pressure, though not immediate, is that rate rises here are on the way. But stimulating the economy without letting it blow out is a very delicate balancing act for central banks, the Reserve Bank here and the US Federal Reserve.
The neutral level of the federal funds rate, namely the level of the federal funds rate that would keep the economy operating on an even keel, that it's a rate where we neither are pressing on the brake nor pushing down on the accelerator. That level of interest rates is quite low.
It is quite low, interestingly. Today, we get a glimpse of our own economy as employment numbers for February are released. Unemployment, so not enough money inside households, is genuinely a worry. Underemployment, all of the jobs created in the past year have been part-time. Now, that said, unemployment today is expected to be on hold at 5.7%. But that's going to have to improve noticeably before there's any real thought of raising rates here in Australia. Let's have a look at the markets because they have changed off of that back of that US rate decision. You can see the dollar's jumped again, 76.98 US cents. US dollar lower. We're also stronger against the euro. So across the board, if we move further forward on commodity markets, you see the gold price up by $20 and oil prices also stronger on a better forecast for the US economy. The Dow Jones index of US shares up 112 points off that decision yesterday. Here in Australia, the All Ordinaries index of Australian shares was up by 15 points. So you can see a big rate decision out of the United States overnight will have an impact here in Australia as well.
What's your forecast then? Because, I mean, if you look at the property market's heated. They're saying it's heated beyond belief at the moment.
You mean the property markets here? Well, that's the problem, isn't it? If you cut interest rates, then you're actually going to only overstimulate the property markets. But if you raise interest rates, and a lot of people who have taken on very big debts to buy properties then find themselves exposed and vulnerable. I suspect it's not going to happen until maybe next year if there's a rate rise, but people have certainly got to prepare themselves that there are no more rate cuts ahead. And in fact, the most likelihood is that there are rate cuts coming in 12 months' time.
OK, so in terms of fixed interest, should people be...
Well, again, remember, generally, the banks are faster than you, but there are some very good fixed-rate deals out there, and if you are thinking that this is going to keep on going, you'd be going as long as you possibly could if you know you're going to be in the house for a long time.